Hi, welcome to the Market Alert for Thursday, the 4th of June 2020. So the Dow soars over 1,000 points since the riot started. Bonds, bullion and the dollar are moved lower. As it says here, it is inconceivable that Rome burns, i.e. the US, as the riots spread. The economy falls into tatters and 40 million job losses. So how does the market continue to move to the upside? Well, that's quite simple. The money that's printed finds its way into the market, and also pure manipulation by the Federal Reserve's trading room. And if you don't think they've got one, just do a search on Google. So a couple of mouse clicks and the market is moved higher. So let's have a look at yesterday. We'll start off with the Dow. We'll look at the daily charts, and you can see that the market has now traded to the 200-day moving average, having closed through the 62% retracement. The 76 retracement is the next upside target, followed by 89%, and then back to the all-time high. It will be interesting if the high is going to coincide with the release of the GDP figures next week, although that will have to really put on some points to do that. That'd be 4,000 to get to that sort of level. So I don't think that's going to happen. But it will be interesting to see what the market does when the GDP figures are released next Wednesday or Thursday. We'll see that later on in the week, or the beginning of next week, which date it is. I think it's the 10th. So the Dow, as I say, has hit that 200 MA. Very tricky area here to get through, as a lot of traders will be looking. So if it can break through, then the 76 is also going to be a resistance area as well. But during yesterday's session, if we just move across, let's just change the tool there, and you can see that in the pre-market session it was quite choppy as the market waited for news. And I think the G7 was actually cancelled. Trump decided to cancel it, even though it was on the news for yesterday. And then once the market opened, again, you've got this down, back, and then back down again, and then moving to the upside. So from here, you've got up, down, and then up. So let's have a look at this. So from this low to this high, where a low is left behind, you'll see the market coming back to 62%, and also the increase in volume there as prices close back. I've put a 20 bar moving average on here for you, and the 5 bar was already existing. So close back above the 5 and the 20, having retraced 62% with high volume. The market then was free to move to the upside. In the quiet part of the session, which is what we've got here, the grey part, that's normally lunchtime, prices then traded sideways, and then of course we always have the rally 9 times out of 10 into the close, which we saw the market do. And then overnight the Dow has hit the previous day's high, which we can see here. We've got some selling there with the red in the volume, and then the selling has increased as prices have moved below the 20 bar moving average, and now have closed back above the 20 bar moving average, and you can see sitting at yesterday's close at the moment. So what news have we got today for the Dow? Let's just bring this down so that you can see it. We've got the main refinancing rate for the Eurozone. That's going to be left on zero. I'm going to come to the Eurozone shortly. Monthly policy statements from the Eurozone as well. So Lagarde's out having a chit-chat. And we've got unemployment claims, another 1.8 million forecast for today. And also, again, the ECB, Lagarde again, at 1:30. I don't think she'll be speaking. There's just a statement at 12:45, but who knows. But she will be speaking at 1:30 p.m. there. So the criminal Lagarde will be out later on this morning. So again, keep an eye on that one. Okay, so in the German Dax in the daily chart, we can see that prices have gone through the 200 MA and also the 76% retracement. So let's have a look inside of the detail for yesterday. Starting off with the 2-minute, I like to see and trade the 2-minute DAX. And in the pre-market session around 6:30, the market was moving high. You can see the buying here. You've got the green volume inside of the red, which is alerting me to a potential change in the trend. And then the market moves up. This is still in the pre-market session, and then at 8 a.m. the market opens and moves lower. So I'm just going to move the chart over slightly, and I'm going to show you from this low to this high that's left behind, and I'm just going to drag this across, and you'll see the market trades to 78%. And also you'll see a cluster of volume here, and you'll see the green ones there as the buying comes in. You've also got the 200 MA for support. You've also got the R1, and then a close back above the 20 bar moving average moves prices to the upside. And then as the trade unfolds, you can see we have profit taking coming into the market with the red bars. And prices retrace from this low to this high, 62%. And again, you'll also see the green volume inside of the red bar there, alerting you to a potential change in trend, and the market then moves back to the upside. In the 5-minute chart, with less noise, this is a bit clearer. You've got the low again down at 6:30 with the green volume bars. We can see the selling coming in here at the start of the or before the start of the session around 7 a.m. You can see this here, and then trying to move the market back up with the green bar. And then prices move lower. Trade to the R1, which we saw in the 2-minute. But then you see this cluster of green bars here, and then prices closing back, and then we're off to the races. But having come down and tested the 62-76% area there, and this is crucial to find those really good risk reward trades without the signals being generated automatically. And then in the afternoon you can see the market coming back, and eventually the buying comes in, kicks in, which you'll see there. The price bars are green and prices moving to the upside. So let's have a quick look at the implied volatility. I think I've got it on here somewhere. Let me just find it. No, let me just add it in then so we can have a quick look. Because then key indicator to what the Dow is likely to do. At the moment you can see it's down at 23.42, still moving to the downside back to the lows of a couple of weeks ago. So again, we'll see how this one pans out, but at the moment showing upside potential for the market. So in other news, as we've seen, the social unrest rises as confidence falls, and again you're going to see a lot more of this going forward, as well as more individuals lose their jobs, the frustration of being locked up, and any excuse really to try and create well, I think Gerald Celente sums it up beautifully when he says, when you lose everything, you lose it. And that's what we're seeing there at the moment. Now, Merkel's coalition agrees to 130 billion stimulus package to boost German economy. I mean, this BS never stops, does it? Just keep printing and printing and printing. And this is what they did yesterday. So they've agreed yesterday. The Eurozone continues to battle with the fallout from COVID-19 crisis. Market participants continue to expect the ECB to unveil further support measures on top of the wave of stimulus announced in March. As the New Squawk writes in its ECB preview, which is just around here, there we go. With rates set to be left on hold, focus will be placed on an expansion to the bank's pandemic emergency purchase program, PEP, whose purchases the ECB revealed for the first time this week. So they have a total current at the moment of 750 billion. However, consensus expects this to be increased at some point by 500 billion this week as part of the proactive strategy, and suggests it could be more prudent to use the whole file, although the expansion lolly price lack of action. I'm just reading through this. Right, and this is the bit. This is the key bit here. Right, here we go. It says measures include extending the duration of PEP into next year. So what was going to be temporary, as I keep saying to you in the market alert, anything that is by any government, any central bank, whether it's removing people's freedoms under the coronavirus bill in the UK, restricting your movement, etc. Anything that they say is temporary never is temporary. Go back and look at the terrorism acts. They've never been removed. They were all temporary. And the same with the ECB. They say, well, this is just temporary, and then we're going to offload the balance sheet. Nothing is ever temporary with these people. They continue to keep these things going as long as they can keep them going. So, like I say, that was the crux of this. They may be putting in 750 billion and may increase this as well. It's not going to work. We know it's not going to work. Simple as that. I don't know. I can't understand why if you start digging a hole, you're just going to get deeper and deeper. At some point you've got to stop the digging, but they don't seem to have any sense of this. So that's what is coming for the ECB and for Europe. And as I've said before, you don't have to worry about any country leaving. It will implode by itself, by the pure way and nature that it is actually run, with blanket interest rates and inflation rates as well, when each individual country has its own different type of economy, and trying to actually bring it all together like this is never going to work on a monetary basis. That's for sure. Like I said before, I'm not interested in the politics. Just common sense and logic says this is not going to work long term because of those simple economic reasons. Okay, that will do for this one. Rather a long one, but there you go. Let's see what happens today with the unemployment claims. Yesterday was better news for the non-farm payroll, but the big one really is on Friday for that. Okay, thanks for watching. See you in the next one.